Today, I'm pulling back the curtain on what might be the most valuable skill any serious trader can develop. The ability to spot explosive trends in their earlier stages, when the smart money is quietly accumulating positions, but before the crowd catches on and drives prices to new heights. Have you ever watched in disbelief as a stock skyrocketed 200%, 300%, even 500% after you sold it for a quick 15% profit? That sinking feeling in your stomach, that voice in your head saying, "I could have been there for the whole ride." It's one of the most frustrating experiences in trading, isn't it? What if I told you there's a single chart setup, just one pattern, that could transform how you identify explosive market trends before the masses pile in? A setup so powerful yet so simple that it could be the difference between capturing small, forgettable gains and riding those massive, life-changing market moves that build real wealth. Has this ever happened to you? You identify a promising opportunity, take a position, and the moment it shows a modest profit, that nagging voice of doubt creeps in. Lock in these gains now before they disappear. So you sell, content with your small win, only to watch in frustration as that same stock continues climbing week after week, month after month, without you on board. But before we begin, please hit the like button and let me know where in the world you're watching from today. It's always fascinating seeing who's joining us from around the world. And if you haven't already, make sure to hit that subscribe button and turn on the notification bell so you don't miss any of our future videos. The harsh reality is that most traders aren't defeated by the market itself. They're defeated by their own psychology and inability to distinguish between normal price fluctuations and genuine trend development. They sacrifice massive potential gains for the temporary comfort of small profits, never realizing how close they were to significant wealth. What separates the consistently profitable from everyone else isn't some complex algorithm or secret insider information. It's a refined ability to recognize the early signals of powerful market trends and, perhaps more importantly, the discipline to stay with those trends through the inevitable pullbacks that shake out less confident traders. The chart setup I'm about to reveal acts like a filter, cutting through market noise to highlight only those opportunities with genuine explosive potential. It helps you identify what I call the sweet spot, that critical phase where institutional investors have committed but before the general public has caught on. Stay with me until the end, because what you're about to discover isn't just another technical pattern. It's a comprehensive framework for identifying emerging trends during periods of accumulation when most retail traders remain skeptical. And that's precisely where the biggest profits are found, in positions established before institutional money fully commits and drives prices dramatically higher. Think about what typically happens before any significant market move begins. There's a period of quiet accumulation, telltale volume patterns, higher lows being established, contracted volatility, and subtle momentum divergences, all precisely calibrated within our setup. These aren't random fluctuations, but deliberate footprints left by market participants with deep pockets and long-term horizons. The transformation in your trading results happens when you learn to spot these early signals rather than chasing what everyone else already sees. It's about developing that rare ability to recognize patterns that others miss and position yourself strategically before the masses even realize what's happening. The hidden truth behind every significant market fortune is surprisingly simple. Those who've accumulated massive wealth through trading aren't necessarily smarter or more informed than everyone else. What truly sets them apart is their ability to recognize genuine market signals amidst the noise, and, this is crucial, their discipline to stay with powerful trends while everyone else gets shaken out during normal market fluctuations. This mindset transformation is the cornerstone of lasting trading success. While most traders are frantically jumping from one setup to another, these market operators patiently wait for high-probability opportunities with massive upside potential. They understand that meaningful wealth isn't created through hyperactivity, but through strategic positioning in the right trends at the right time. Think about this paradox for a moment. The more you trade, the less you might actually achieve. This goes against everything we've been conditioned to believe about success. We're taught that more effort equals better results. But in the world of trading, this equation often breaks down completely. Many traders sabotage their results by confusing activity with achievement, mistaking constant trading for meaningful progress. Join our community of strategic traders by hitting that subscribe button now. You'll get immediate access to powerful chart setups that can completely transform your approach to market trends. Behind the scenes of virtually every trading disaster is this same pattern: impatience and an inability to distinguish between temporary price movements and genuine trend developments. The market rewards patience far more generously than it rewards activity. Would you rather make 50 trades that net you 2% each or catch just one 100% move? The mathematics is straightforward, but the psychology required to achieve this is anything but simple. True wealth isn't built by catching every minor price fluctuation. It's created by identifying those rare, powerful trends that carry prices far from their starting points and having the extraordinary discipline to stay with them. Now, I want to go even deeper into this topic by exploring a powerful metaphor that fundamentally changed my approach to market trends. Think of the market as a massive river with powerful currents flowing in different directions at different times. Most traders spend their entire careers fighting against these currents, exhausting themselves while making minimal progress. The journey toward consistent profits begins when you stop trying to predict where the river should go and instead learn to identify which way it's actually flowing. Our chart setup essentially serves as your navigation system, revealing the direction and strength of these powerful currents before they become obvious to everyone else. This river doesn't care about your opinions or expectations. It doesn't care what you think should happen based on news, earnings, or economic reports. This revelation is initially humbling, but ultimately liberating. When you align yourself with these larger forces rather than fighting against them, you suddenly find yourself carried along by momentum that others miss entirely. If you've ever found yourself arguing with price action, convinced the market was wrong, while your account balance told a different story, type "go with the flow" in the comments section below. Let me share something that completely transformed my understanding of what the markets are actually telling us. At its core, the market is constantly engaged in a sophisticated conversation with us. Every price bar, every volume spike, every momentum shift is part of an ongoing dialogue between buyers and sellers. The problem most traders face isn't a lack of signals, it's drowning in too many of them. Think about your own experience watching price action. It's overwhelming, isn't it? The market is constantly shouting, whispering, and gesturing in 1,000 different directions simultaneously. Most traders spend years trying to make sense of this chaos, never realizing that the key to clarity isn't having more information, but having the right filter. The revelation that changed everything for me was understanding that our chart setup essentially acts as a translator for this complex language. It filters out the meaningless noise and highlights only those patterns with the highest probability of developing into substantial moves. It's like suddenly being able to hear a single important conversation in a crowded, noisy room. Behind the scenes of this market communication are actual participants making real decisions with serious capital. Which brings me to perhaps the most important insight about how major trends form. Before any significant market move begins, there's a critical phase that most retail traders completely miss. A period of quiet accumulation where smart money is establishing positions while prices appear to move sideways or within a range. The journey toward consistent profitability accelerated dramatically for me when I realized that institutional investors don't simply jump into positions all at once. They leave footprints as they gradually build their positions, specific volume patterns that show increasing buying pressure on up days, while volume diminishes on down days. They create higher lows on pullbacks. They cause volatility to contract before expansion. They generate subtle momentum divergences that most traders overlook entirely. These aren't random fluctuations, but deliberate actions by market participants with deep pockets and long-term horizons. Our chart setup is precisely calibrated to detect these institutional footprints before the general public becomes aware of them. By the time financial media starts discussing a trend, by the time your neighbor is asking about that hot stock, the smart money has already established their positions at much lower prices. The mindset shift here is profound. Instead of trying to predict what will happen next in the markets, you're simply identifying what's already happening beneath the surface. You're recognizing the early stages of accumulation before the trend becomes obvious to everyone else. This perspective completely eliminates the need for crystal ball predictions and replaces them with evidence-based observations. What makes this approach so powerful is that it's based on actual market behavior rather than opinions, forecasts, or wishful thinking. If you've ever felt like you were always one step behind the market, constantly buying tops or selling bottoms, type "reading the footprints" in the comments below. Let me share one of the most profound metaphors that completely transformed how I understand market behavior. Imagine the market as a massive river with powerful currents flowing in different directions at different times. Most traders spend their entire careers fighting against these currents, paddling furiously upstream, exhausting themselves while making minimal progress, and eventually getting swept away by forces far greater than their resistance. The breakthrough moment in my journey came when I realized that true market mastery isn't about predicting where the river should go or trying to force it in a particular direction. It's about developing the awareness to identify which way it's already flowing and then positioning yourself to move with that current rather than against it. This mindset shift is initially humbling but ultimately liberating. The river doesn't care about your opinions. It doesn't care what you think should happen based on news headlines, earnings reports, or economic data. It flows according to its own dynamics, the collective decisions of all market participants expressing themselves through price action. Behind the scenes of every significant market move is this same pattern. Individuals who recognize the flow early and position themselves accordingly rather than arguing with reality. The impact of fighting the market rather than flowing with it is catastrophically expensive, both financially and emotionally. Now, here's another revelation that completely changed my approach to capturing major trends. The obsession with buying at the absolute bottom and selling at the perfect top isn't investor wisdom. It's a gambler's fantasy. This pursuit of perfection keeps countless traders trapped in a cycle of frustration and missed opportunities. Think of it like this. Imagine a train departing from the station slowly at first, then gradually building momentum until it's moving at full speed. The gamblers are those frantically trying to jump aboard while the train is still in the station, risking everything to say they got the best possible entry. Or they're attempting to leap off at the final destination, often miscalculating and getting hurt in the process. But the true wealth builders? They're patiently waiting on the platform, watching for clear signs that the train is definitely moving in their anticipated direction. Then, when the momentum is undeniable, but there's still plenty of track ahead, They calmly step aboard and enjoy the journey. They're capturing what I call the fat, juicy middle of the move, where the risk is lower and the profit potential remains substantial. The beautiful paradox here is that by giving up the dream of perfect entries and exits, you actually increase your probability of substantial profits. Our chart setup reveals precisely when a trend has established enough momentum to be trustworthy, but still has significant room to run. It identifies that sweet spot where smart money has committed, but the general public hasn't yet piled in. This perspective frees you from the pressure of needing perfect timing and replaces it with a focus on recognizing established momentum. If you've ever found yourself paralyzed by the fear of missing the perfect entry point, write "riding the middle" in the comments below. Now I want to explore how this setup helps you decode the subtle language of the market itself. Because before any significant move, the market leaves breadcrumbs, subtle clues that most traders miss entirely. These aren't random fluctuations, but deliberate footprints of institutional activity and changing market psychology. If you're serious about spotting explosive trends before the crowd, hit subscribe now and never miss another opportunity to build real wealth in the markets. The journey toward market mastery accelerates dramatically when you begin to recognize these whispers before they become shouts that everyone can hear. The market communicates its intentions through specific patterns, increasing volume on up days, while volume diminishes on down days, volatility patterns that contract before expansion, subtle shifts in sector leadership and money flows. Our chart setup acts as a decoder, helping you recognize these whispers that precede major moves. What fascinates me about this transformation in awareness is how it changes your entire perception of price action. Where novice traders see random price movements, you begin to recognize patterns and intentions. Where others react to news headlines, you've already anticipated the reaction because you've seen the breadcrumbs leading to it. This elevated awareness creates a profound edge in your decision-making process. The revelation doesn't happen overnight. It requires patient observation and a willingness to see what's actually happening, rather than what you hope or fear might happen. But once your eyes are trained to spot these subtle signals, they become impossible to unsee. You develop what some might call a sixth sense for market direction, though it's not mystical at all, just heightened pattern recognition. This brings us to perhaps the most counterintuitive insight in all of market speculation, one that completely transformed my approach when I finally internalized it. The real money isn't made from the active parts of trading, the buying and selling. The wealth is created during the waiting. Most people enter this arena believing that success comes from clever entry points or perfectly timed exits. They're constantly searching for that magical indicator or secret pattern that will give them the edge. But behind the scenes of every great market fortune is a much simpler truth. The operators who accumulated vast wealth were those who could sit still once they had identified a powerful trend. Think about that for a moment. The hardest work in speculation isn't analyzing charts or reading financial statements. It's having the emotional resilience to hold your position. While the market validates your thesis, it's about cultivating patience, not cleverness. This mindset shift explains why some traders with modest analytical skills dramatically outperform brilliant analysts who can't control their impulse to constantly trade. I remember watching a position grow by 30%, feeling that surge of validation and the immediate urge to lock in profits. But the underlying trend was still intact. All the signals that put me in the trade were still present. The hardest thing I ever learned to do was nothing, to sit on my hands and let the position continue working. That single decision ultimately led to a 300% gain instead of a 30% one. Our chart setup gives you something precious, the confidence to wait. By identifying specific conditions that historically precede major trends, it provides the conviction necessary to hold through the inevitable fluctuations that shake out most traders. This psychological edge is often more valuable than the technical edge itself. If you've ever experienced that moment of recognition where you saw a setup forming but hesitated to act, type "patience pays" in the comments. Now, let's examine another fundamental market truth that our setup helps you navigate. Prices never move in straight lines. The path of a trend resembles a staircase, not an elevator. Advances, pullbacks, and advances again. These natural fluctuations serve an essential purpose in market ecology. They shake out the timid traders who mistake healthy corrections for genuine reversals. It's during these inevitable pullbacks that most people abandon ship, surrendering their positions to those with deeper understanding and stronger conviction. The psychological impact of watching your position move against you, even temporarily, can trigger primal fear responses that override rational decision-making. That's precisely why most traders never capture significant trends. They simply can't withstand the emotional turbulence. The transformation in your results begins when you develop the discernment to distinguish between a normal retracement and an actual trend change. Our chart setup provides specific parameters that help you make this critical distinction objectively rather than emotionally. Is volume declining during pullbacks? Are support levels holding? Is the fundamental story still intact? The journey toward mastery isn't about eliminating pullbacks. They're an inevitable part of market dynamics. It's about developing the perspective to see them as opportunities rather than threats. Each successfully navigated pullback strengthens your confidence in the overall trend and your ability to stay with it. I remember watching one of my positions drop 15% after a strong advance. Every instinct screamed at me to sell and protect what remained of my profits, but the volume was declining on the pullback, key support levels were holding, and the setup remained intact. Staying in that position through the temporary weakness ultimately resulted in a 400% gain rather than a modest profit cut short by fear. This brings us to another liberating revelation that completely changed my approach to the markets. You don't need to catch every move to be wildly successful. In fact, the relentless pursuit of every market opportunity is precisely what keeps most traders trapped in mediocrity. The hidden truth is that just one or two significant trends per year, properly identified and ridden to their conclusion, can make your entire fortune. This insight goes against everything the modern trading culture promotes. We're bombarded with notifications, breaking news alerts, and can't-miss setups that create a constant fear of missing out. This environmental pressure pushes many into a scattered approach, spreading their capital and attention too thin across dozens of marginal opportunities, rather than concentrating their resources on the truly exceptional ones. Think about the consequences of this mindset shift. Instead of frantically jumping from one trade to another, what if you develop the patience and discernment to wait for those rare, perfect setups? The ones where multiple factors align: technical patterns, fundamental catalysts, institutional interest, and sector momentum, all pointing in the same direction. These convergences don't happen every day, but when they do, they often signal the beginning of those massive wealth-creating moves. It's like a treasure hunter who understands that digging hundreds of shallow holes will never be as productive as digging deeply in the few locations where all the clues suggest buried treasure. If you're starting to see how quality trumps quantity in your trading approach, type "fewer better trades" in the comments below. Now, I want to go even deeper into this topic by exploring the mathematical reality that makes this approach so powerful. Here's another transformative truth that few ever internalize. You can be wrong half the time and still accumulate substantial wealth. This revelation completely reoriented my understanding of what creates market success. Most people approach trading with the flawed expectation that they need to be right on nearly every trade. This creates unbearable pressure and leads to devastating emotional responses when inevitable losses occur. But what if being wrong isn't the problem? What if the real problem is how you respond when you're wrong? The essence of this wealth building formula is beautifully simple. Cut losses short, let profits run. When you're wrong, acknowledge it quickly. Exit with a small loss and preserve your capital for the next opportunity. When you're right, have the courage to stay with the position as it develops into a significant trend. This balance, this discipline, is what separates consistent winners from perpetual strugglers. Behind the scenes of every great market fortune is this same pattern. A handful of substantial winners that far outweighed numerous small losses. It's not about win rate, it's about the relationship between your average win and your average loss. When that ratio tilts dramatically in your favor, even a modest percentage of winning trades can generate extraordinary returns. I've seen traders with just a 40% win rate dramatically outperform those who are right 70% of the time, simply because they understood this mathematical reality. The former might average 300% on winners while limiting losses to 20%, while the latter captures tiny gains of 15% but occasionally suffers catastrophic losses of 50% or more. This brings us to perhaps the most profound challenge in this journey, the uncomfortable truth that our own human nature actively works against our success in markets. This internal struggle creates a fascinating paradox that explains why so many intelligent, hard-working people still fail to capture significant trends. Our evolutionary programming, the very instincts that helped our ancestors survive, becomes our greatest liability when applied to market speculation. We are naturally wired to run toward what feels good and away from what feels painful. But in markets, this instinct consistently leads us astray. We become greedy precisely when we should be cautious and fearful exactly when we should be bold. The psychological blueprint is almost universal. When prices are rising and everyone's making money, our greed intensifies. We buy more, take larger positions, and throw caution to the wind, right at the moment when risk is highest. Conversely, when markets are plunging and genuine bargains appear, our fear paralyzes us. We can't bring ourselves to buy what others are desperately selling, even though this is exactly when the greatest opportunities emerge. Perhaps the most damaging manifestation of this flawed wiring is how we handle winners versus losers. We instinctively sell our profitable positions too soon, eager to lock in gains and avoid the pain of watching profits evaporate. Yet with losing positions, we hold on stubbornly, hoping they'll recover and spare us the emotional sting of admitting we were wrong. If you've noticed yourself fighting against your own psychology in your market decisions, type "rewiring my instincts" in the comments. This deadly combination, cutting winners short while letting losers run, is the perfect recipe for mediocrity or worse. The revolutionary insight is that simply reversing these natural tendencies, holding winners longer and cutting losers quickly, immediately puts you ahead of 90% of market participants. Our chart setup serves as an objective framework that helps override these emotional responses by providing clear, unemotional signals based on actual market behavior rather than our hopes or fears. Now let's explore a critical element of success that separates the professionals from the amateurs: the discipline of having a clearly defined plan before you ever enter a position. This strategic foundation is often overlooked in the excitement of spotting what seems like a promising opportunity. But the hidden truth is that most traders fail not because their analysis was wrong, but because they operate on feelings rather than rules. Think about your own experience for a moment. How many times have you entered a trade with a vague sense that this looks good, but without any concrete parameters for how you'll manage it? Without predetermined exits for both profit and loss? Without a plan for what you'll do if the market moves sideways instead of in your anticipated direction? This ambiguity creates a psychological vulnerability that the market inevitably exploits. The transformation begins when you establish these boundaries before putting capital at risk. Knowing exactly how you'll act if you're right, and perhaps more importantly, how you'll act if you're wrong, creates a decision framework that protects you from your worst emotional impulses. It's like having a map and compass before entering unknown territory, rather than wandering aimlessly and hoping for the best. This preparedness doesn't just impact your results, it fundamentally changes your relationship with the market. When you have clear rules, the emotional turbulence of price fluctuations becomes significantly less disruptive. Even with the perfect plan and impeccable analysis, you'll encounter what I consider the ultimate test in capturing significant trends. The market will test your conviction in countless ways. News headlines will question your thesis. Well-meaning friends will share contrary opinions. Price will fluctuate erratically, sometimes moving sharply against you before resuming the main trend. Let's explore another crucial truth about capturing major market trends, one that might fundamentally challenge how you've been approaching opportunities. The reality is that significant wealth-creating trends rarely come from following the crowd. By the time the majority recognizes a trend, acknowledges it, and feels comfortable participating, the most profitable portion of the move has typically already occurred. This creates one of the great paradoxes in market speculation. To catch these powerful trends near their beginning, you must be willing to act when it feels uncomfortable, when your judgment and analysis diverge from popular opinion. Consider the psychological weight of this requirement. You're essentially placing your capital at risk based on a conviction that runs contrary to what most market participants currently believe. Behind every major market trend is a period of disbelief when the emerging move is dismissed, rationalized away, or simply ignored by the majority. This is precisely when the foundation for enormous profits is laid. Those who can recognize the early signals and act decisively despite the lack of social validation position themselves to capture the full evolution of the trend. If you've ever found yourself hesitating to take a position because it wasn't yet popular or widely discussed, type independent thinking in the comments below. As we wrap up our exploration of what it truly takes to catch those life-changing market trends, I hope you're walking away with a fundamental shift in how you approach trading. Remember, this isn't about perfection, it's about patience, discipline, and the courage to act differently than the crowd when your analysis suggests a major move is forming. The one chart setup we've discussed isn't just a technical pattern. It's a comprehensive framework that helps you identify emerging trends, stay with them through inevitable fluctuations, and exit only when the actual trend has changed, not just temporarily pulled back. When you combine this technical edge with the psychological principles we've explored, you position yourself to capture opportunities that most traders only see in hindsight. If something in today's message resonated with you personally, drop a comment with "catching the big swing," so I know you made it to the end. Your experiences and perspectives enrich our collective understanding, and I genuinely take time to read through them all. I'd appreciate if you'd hit that like button below. It's a small gesture that helps others discover these deeper market insights that go beyond typical technical analysis. And if you haven't already, subscribe to join our community of traders focused on meaningful trends rather than market noise. Right beside this video, you'll find our exploration of how to properly size your positions when you do identify these major trends, because finding the move is only half the battle. Click on that video when you're ready to dive deeper into maximizing your returns while managing risk effectively. The principles we've discussed today lay the groundwork for what we'll explore there. See you on the other side.